Hey guys, so today we'll go over my trading system and strategy video. I already made a video on trading psychology, the three-part series to my trading process. So I have trading psychology, system and strategy, and risk management as my topics. The three topics. I already made a video on trading psychology, so you can go back and check it out. So today let's get on with the trading system and strategy video, and I'll open the presentation. So this is my presentation for trading system. Also, before I get started with this video, if you have any queries, you can comment below, and I recommend you play this video at least 1.5 or 2x speed, because I go at my own steady slow pace, and if you find this video slow, so please try to increase the speed. So what is a trading system? Trading system is basically your way of analyzing the market, or the strategy or the system you use to make your analysis before you place a trade. So this is what I call as a trading system, and people trade in many different ways. Some use indicators, some use price action, and there's many different ways. These are some of the common views, and but what I want to drill down is get to the very core, or the fundamental of way the markets move and way the price moves, way volume enters the market. Okay, so for me, basically in my trading system, there's only two things which you can see in your charts which are creating price moves. Okay, which is, one is price, the basically the levels, the number, and another one is volume. So for me, I think price and volume is the major things in which all of the rest of the methods or system are built. Price and volume are the fundamentals. Okay, so now let's get on with my precise model way I have my system design. This is also a fundamental way of looking at your trading system, not completely based on technical indicators where I'm saying if there's a MACD crossover buy. No, nothing like that. I'm gonna get over to the very core and the fundamental of way price and volume works in the market. So let me click on the next slide. I think I could maybe click on the full screen. Yeah, sorry guys, bear with me. So the first aspect of my trading system is gonna be structure. Okay, you might wonder what I mean by structure. So let me get to an example, I guess, for you to better understand. So now if you can see this Bitcoin chart, today is Monday 27th 1 2025. If you go on to the higher time frame, let's say the median or the middle is 4 hour. When you squeeze the chart, you can see an overall frame of where the price is trying to move, or whether it's going up or down. That's it. The basic thing of structure is just to get an overall picture of if the price is going up or down. And from looking at this chart, what do you think the price is trying to do? It's simple. The answer is price is trying to push down as of now. And you can say that the overall structure looks bearish. That's it. And you can do this with all of the time frames. You can look at the overall structure, whether it's trying to push up higher or lower. And for me, structure becomes very important when you look at it from a higher perspective, okay? Because you can see the structure from a shorter time frame perspective also, but usually the market moves according to the higher time frame. The way the higher structure is developing is the way the market is gonna be pushing towards. And this is the daily structure and weekly structure. So we'll just stick to the three structures as of now, 3 time frames. Later you can drill down on your own. Forgive me, please ignore these lines. So let's get back to the presentation. So structure is basically, for me, is higher high, higher low, lower high, and lower low, okay? And the overall frame of the market, if the price is going up or down, or range bound, as I said earlier. So this for me is structure. So now you might be wondering, what is higher high, higher low? So basically that the markets create a certain pattern, okay? I'm using the zigzag plus indicator. I'll go over it, what it is. So this basically shows you the structure. As you can see, we created a higher high here on Monday 20th, and then we sort of had a higher low because we didn't break the previous lower high, okay? So it created a higher low, and then we went up. We didn't get to this level, we didn't break it, so this is a lower high now. So this is it. Basically structure is just the market creating lower low, then lower high, higher low, higher high. This is it. And to put it in a presentation video, this is what the market is always doing. In a bull trend, the market is just creating higher high, higher low, higher high, higher low, higher high, okay? And the same thing in the bear trend, and this is in range bound, okay? And you can see this happening in all of the time frames too, if you want to find the structure, okay? This is 15 minutes. I'm sorry this indicator isn't that precise, but see what happened is here we created a equal high, then the market wasn't able to push higher. We had fresh 4-hour open, and the volume just swinged to the downside. So this is the first aspect of my trading, which is the structure, to look at the overall picture of the market where the price is trying to push. Structure is better understood at higher time frame like weekly, daily, and 4-hour. So next one would be trend, okay? Trend is similar to structure, but trend is where you understand where the market is trying to go, either to the upside or the downside. There's a monthly trend, weekly trend, daily trend, 4-hour trend. Basically price going up or down to economic or other news events or geopolitical crisis. And so this is the trend. Basically when the price is going up, it's an uptrend, then the sideways, then the downtrend. Structure and trend could be put into one aspect, but I have separated it, okay? So structure and trend is similar, but I put trend first to get an overall view of the market. Structure, sorry. So let's get on with the next one, which is supply and demand, okay? So this is where the price, sort of bounces up and down. Okay, places where price sees strong levels for buying or selling. For example, I use SMAs too for supply and demand zones. As we can see now in the 4 hour, we are at 200 day moving average. Usually what happens is the price sees some pushback up when we hit 200 day moving average. So this is one of the criteria I use to identify my supply and demand zone. And also I use zigzag, but it is not that precise. It's just for me to look at the structural change, but I use the MAs, okay, to identify support and resistance zone. And then also like manual price, price action. So basically we saw resistance here, so it's easy to say that there's a strong supply zone around these levels. Okay, and another tool I use to identify my supply and demand zone is, let's say the price creates a support here, so I'm gonna simply draw my line, let's say from this point to like this point. If the price is like rejecting above this 50% levels, it's a sell zone. Okay, it's simple. And whenever the price is gone below these 50% to the downside, it becomes a buy zone. Because usually what the price does is it trades within the middle value. Usually when there's a too big of a move to the downside, the price, what it does is it tries to push back up. Price moves in wave like patterns. Since we had like this huge move, now we might see some kind of price after some consolidation here will be trying to push back up higher, maybe to this level, and then continue the trend. I'm sorry, this might be going much lower. Okay, not here, might be going here. So these are basically the scenarios, and then like here, like this price moves in wave like pattern, and you can see this everywhere. Here we were sort of ranging, we broke down, and it's the same somewhat similar scenarios just playing in the market. So this is an example, and through price confirmation you can enter your trade. So let's get back to the supply and demand. So strong zones or support or resistance levels where the price reacts to buy or sell triggers. Okay, and supply zone is where the price sells off at a strong level, and demand is where the price can buy and push back higher. You can manually draw these levels or use indicators like pivot points, zigzag plus plus, or moving averages, or manually drawing your levels to assess. Okay, and I can show you the pivot points the way I use for lower time frame. So basically, if you can see, since the trend is moving in the downward direction, every rejection point at a pivot is like a sell signal. Simple. Because what happens is the momentum is in the favor of the downside, it is better to trade with the direction of the trend. And since this is a strong zone for your sell trade, this becomes a supply zone. Simply placing a trade with this signal is going to be pushing the price lower, and it was at approximately 300 points. You can basically use these 1 minute and 15 minutes as an entry criteria, and 1 and 4 hour for analysis. So see, the 4 hour structures were previously bearish, so there was a strong bearish signal and the fresh 4-hour opened at 9:30, and exactly around that time we saw this rejection and the price pushing down lower. Okay, so this is how my trading analysis and system is. And most of this people speak of these three things, okay, trend, or maybe two things, let's say structure and trend and supply and demand. But I have added another concept called price momentum and timing. I'll go over that next, and before that, let's just get on with this quick structure image of this supply and demand zone. See, so basically the price creates lower high, lower high, and then it hits the lowest point, and then when the price breaks, okay, let's say it broke all the lower high and created a higher high, then here when it comes, it'll create a higher low. Okay, that's your entry. Okay, higher low. See, this is the way. I'm sorry guys, this is the way. Okay, I'll just add it here and here and over here. See, here what happens is the price creates a lower high because it was in a higher low trend, and then when the price is gonna go to the downside, it creates this lower high, and then the price starts moving down. This is supply and demand basically. Okay, and let's get on with the price momentum and timing. This is something which I developed through my experience. So the way I use the approach to analyze the market is through multi-time frame analysis. Okay, I always start with the top-down approach, understanding the weekly, structure, monthly, weekly, daily, 4-hour. Okay, and then again I can drill down to 4-hour, 1 hour, 15 minutes, 1 minute, or 4-hour and 15 minutes. This is the way I do my analysis, and I'll also make another video on how I choose my entry criteria. The more confluences you have, the better your trade plays out. Okay, and the thing with price momentum and timing is that price moves at a certain time around certain level. Timing is highly correlated with certain levels to create price momentum. Example, when London and New York session, opens and closes, price hits certain level, and then it creates sort of a reversal or a push up. Okay, as you can see now, in another 1 hour a fresh 4-hour candle is gonna open, and currently the momentum is strongly to the downside. Even if this candle trying to push back up temporarily, I think we will be heading lower, even with the price maybe coming to some levels, maybe to 100 MA. Okay, so this is price momentum and timing. So every 4-hour candle a fresh volume enters the market. Okay, and you'll see the price creating momentum with the timing. So understanding price momentum and timing comes with experience and chart time. Okay, but you can always keep in mind the 4-hour trend. Always go with the 4-hour trend direction. Usually it plays out according to that. And there is a lot of times you shouldn't be trading. Most of trading comes through experience, and knowing when to trade and when not to trade is based on experience, like I said. And I think I came across this in my previous psychology video too, in the discipline part, where you should, there be a lot of times you shouldn't be trading in the market, okay, or trading against the trend in the market. So over time you develop a feel for the market through experience and knowledge. Okay, and there's nothing like I made it in trading. There's always levels to this business. till you reach the summit, there's always challenges after challenges, to overcome. It's like a constant journey, trading is. And even after you become very experienced, well equipped, you can still make losses and mess things up in trading, because it's trading is always uncertain and there's no certainty in this. Markets are constantly changing. It takes higher degree of mastery to consistently trade well in the markets. Okay, because it's not just the strategy or the technical aspects or fundamental aspects of things. Like I said, psychology plays a major role, at least 90%. That's why I made that video first. And rest of the thing, like system and risk management, it can add up to more lesser variable, maybe 10%, to be honest, both of them. Because if you don't have a good psychology, know when to trade and when not to trade, how to trade, it all comes in the mindset part. Your Even if you have a good system and risk management, you can still mess things up if you are psychologically not equipped. So this is my systems video, and to draw over the conclusion, I'll just go over these 2 points, which is basically trading is like playing a game, and getting good at playing the game is when you are really good at something. You're just doing it for the process. Okay, you're not doing it for the result. You're just enjoying the process and doing what you have to do. You're not having expectations, goals, or just trying to reach a target. That doesn't work. You have to enjoy the process. And another thing, I gave you this framework of my system or the fundamental aspects of trading. So gaining this knowledge is not enough. You have to see and apply what I have just taught you on your own. Okay, and it takes time for it to be absorbed and processed. So you have to trust your path and journey. But these are the fundamental aspects for my trading system and strategy, which is structure and trend, and then supply and demand, and the final touch to it is price, momentum, and timing. Basically, price moves only at a certain time or certain period in the market. Exactly when the price hits a certain point during a certain time, the price moves. Okay, this is basically price, momentum, and timing. So guys, if you have any doubts or queries, please let me know in the comment section. And if you like this video, please like and subscribe, and we'll see in the next video. We'll catch up, which is risk management. So take care until then.